If you talk about the net interest margins in the second quarter, that has improved. What's the trajectory looking like going forward? Are you expected to maintain similar levels, or are you expecting a further improvement to come in there?
It should improve a bit, though marginally. Primarily, it is dependent on two factors. One, the cost of funds staying where it is or improving marginally. The second is the vehicle finance book, which is a fixed rate book, which is where we could not catch up on the NIM cost of fund increases, and therefore the NIM levels earlier, is now changing profile as we keep on adding new portfolio with a higher yield levels. So vehicle finance book has started improving yield, and that should also contribute to the NIM improvement. So we see NIM improving over the next 2 quarters. Yeah. All the new businesses, whether it is the unsecured part, which is again broken into two parts, which is the through the fintech and through our traditional route, as well as the SBPL, which is the small business personal loans, and the SME loans. All these new businesses, when we started 18 months back, they were on a low base, so the growth percentages seem to be very high because the base is very small. But as we move forward, the growth percentages will change, but in value terms, they will be incrementally increasing. So I don't know how people would like to read it. If that growth percentages seem to have dropped, then it can be read as that we are slowing down. But if it is read as an absolute terms, we are increasing the disbursements as well as the asset levels, then we will be growing the book. And our intention is still to grow all these books. ROE, we are never committing 20%, though we may be delivering in the 19% range. I think we should be comfortably above the 17 of 18%, and we will not let that drop. The last quarter had been a good quarter across all business segments. Vehicle finance grew, LAP grew, HL grew, and the new businesses also grew well. And we see that sort of repeating as we go into the next 2 quarters, because the festival season seems to show a good growth in the auto, especially in the passenger vehicle, and we also see a good traction in the used vehicles. But auto is a little bit cyclical, so you may have to see some reductions over maybe next few quarters, not the next few quarters, but after that it will go through some cycle. So that is the whole point of we diversifying into multiple product lines, which could help us ride different cycles of different products.